Donald Trump used to bank with the big guns. Now he's borrowing from Axos Financial, an obscure, internet-only institution based in San Diego and Las Vegas. In mid-February, Axos refinanced a $100 million Trump Tower mortgage due in September, a New York City Finance Department document shows. The new loan was made just days after the Trump Organization's auditor resigned, saying that 10 years of the company's financial statements could not be relied upon. In lending to the Trump Organization, Axos is stepping up when other banks have balked. But this is not unheard of for Axos. An examination of legal filings, internal documents, and land records shows Axos has a history of handling atypical loans. Axos has teamed up with non-bank lenders on loans to small businesses that carried cripplingly high double- and triple-digit effective annual interest rates, loan documents show. The bank has also specialized in loans to foreign nationals, internal documents and its website state, and has offered a type of loan that allows borrowers who paid cash for a property to turn around and instantly take money out. Such loans may pose money laundering risks, banking analysts say. The bank has also been sued by 2 former employees who say they were wrongfully fired after they raised questions about its practices. On March 21, Jennifer Brinker, hired in 2018 to review the bank's loan portfolios for its governance, risk management and compliance department, filed suit against Axos in federal court in California. Brinker accused the bank of intentionally understaffing its compliance department in an effort to conceal its failure to comply with federal banking regulations, and contends she was terminated in January 2021 while completing a report highlighting deficiencies at Axos, including significant issues in the bank's anti-money laundering practices. A spokesman for Axos, who asked not to be identified, said the bank disputes Brinker's allegations and her perception of the underlying factual circumstances. Axos intends to defend against the lawsuit vigorously, the spokesman added. A lawyer representing Brinker declined to comment further on her case, but said they both look forward to proving her claims in court. Later this month, Axos is scheduled to face a former internal auditor in a wrongful termination case in California federal court. That auditor, Charles Matthew Earhart, 35, was fired by Axos after he raised concerns about its practices, his 2015 lawsuit says. Among other practices alleged by Earhart, Axos allegedly failed to advise regulators of substantial and risky loans to dubious borrowers, did not disclose to regulators that it had received grand jury and other subpoenas, improperly denied that it held documents responsive to a Securities and Exchange Commission subpoena, and instructed employees not to communicate with regulatory officials. The bank's spokesman said it denies every one of Earhart's allegations. All were investigated, both internally by Axos's audit committee and independent counsel, and externally by government regulators and outside auditors, the statement said. None of the investigations or audits found any merit in Earhart's allegations. Cash recapture loans. Axos was founded in 2000 as Bank of Internet USA, or BOFI, a digital enterprise with no brick-and-mortar branches. It changed its name to Axos in 2018. Its shares trade on the New York Stock Exchange. With $15.5 billion in assets at the end of 2021, Axos is a relatively small, federally chartered savings institution. J.P. Morgan Chase, by comparison, holds over $3 trillion in assets. Some $12.6 billion of Axos assets are loans, including residential mortgages and loans on commercial real estate and multifamily dwellings, SEC filings show. Axos is overseen by Gregory Garibrandt, a lawyer, former Goldman Sachs banker and McKinsey & Company consultant. Before joining Axos in October 2007, Garibrandt was an executive at IndyMac, a huge California savings and loan that collapsed in July 2008 under a mountain of toxic mortgages, according to bank regulators. IndyMac was one of the nation's biggest bank failures, costing the FDIC fund more than $10 billion, a government investigator estimated. Axos has been a fast grower and has turned in a torrid stock performance in recent years. In 2018, Garibrandt earned $27 million, just 10% less than the $30 million received by Jamie Dimon, the chief executive of JP Morgan Chase. In lending to the Trump Organization, Axos is forging ties with a borrower that has proved troublesome for other banks over the years, with multiple bankruptcies more than a decade ago and many lawsuits. Axos declined to comment about the terms of the loan, and the Trump Organization spokeswoman did not respond to an email seeking comment from NBC News. But Eric Trump told CNN in a statement that Trump Tower is one of the most iconic properties in the world and sits on arguably the most prestigious corner in all of New York. We have incredibly low debt, have a tremendous amount of cash, and have an extremely profitable company. We had no problem refinancing. In September, Forbes valued the commercial office and retail space backing the $100 million Trump Tower mortgage. Axos refinanced at $285 million. Gucci is a retail tenant on the ground floor, paying an estimated $24 million a year. The $100 million Trump Tower mortgage represents a large loan for a bank the size of Axos. As a savings association, Axos is subject to limits on loans to one borrower based on a measure of its capital. On June 30, 2021, that limit was $203.8 million, the bank's filings show, and its largest outstanding loan balance was $145 million. For fiscal year 2021, Axos held $3.2 billion in commercial real estate loans, or 27.5% of its total loans. Most were on properties in California, its regulatory filings show. The new Trump Tower financing increases Axos lending in New York State by almost 30%, based on its December 2021 holdings. Axos held $4.4 billion in single-family mortgages in 2021, or 38% of its loans held for investment. In her lawsuit, former employee Brinker alleged that in 2020 Axos tried to conceal problems with home loans made to borrowers by A&D Mortgage, a Hollywood, Flaw-based non-bank mortgage lender financed by Axos. The bank failed to tell its board or its investors the loans had become problems, Brinker alleged. A&D Mortgage was funded by an Axos credit line for 5 years, from April 2016 to April 2021, Uniform Commercial Code filings show. A&D would sell the mortgages it had underwritten using Axos's line of credit into a pool of loans packaged and issued by a related entity known as Imperial Fund Capital Partners. But when COVID struck, investors refused to buy the security and the loans remained as collateral backing Axos's credit line for longer than the 60 days the bank's policy allowed, according to Brinker's lawsuit. A&D Mortgage is headed by Maxim Slyuserchuk, according to Florida Corporate Records, who described himself in a 2013 lawsuit he filed in Miami-Dade County as an international businessman with experience in the Russian markets and in international finance. Slyuserchuk also owns 50% of Imperial Fund Capital, an SEC-registered investment advisor with $316 million under management. It pools mortgages into securities and sells them to investors. One of its units, Imperial Fund 2 LLC, is financed by Sovcombank, a UCC filing shows, Russia's 9th largest bank. Sovcombank was sanctioned by the U.S. Treasury on February 24. Neither A&D Mortgage, Imperial Fund, nor Slyuserchuk responded to an email message seeking comment. On its website, Axos says it has extensive experience in mortgage lending to non-resident aliens and offers loans of up to $20 million accompanied by 50% down payments. A 2014 investor presentation noted that the bank specialized in lending to Chinese nationals, for example, who do not have tax returns that they can present to document their financial standing. Axos has also made loans to Russian nationals. Asked about the risk of such lending given the Ukraine invasion, the Axos spokesman said they represent a fraction of 1% of Axos loans. All such loans were done at low loan-to-value ratios and are well secured, he added.